We're standing by for those Nvidia results, and who better? We're joined by Dan Morgan. Oh, I'm sorry, we don't have Dan Morgan yet, but we are looking forward to having him. Oh, they are out, and we'll get to Dan Morgan very shortly, but let's see how these Nvidia numbers shaped up. At $3.1 trillion, there's a lot of hope riding on this company. So the revenue beat estimates, second quarter results. Revenue, wow, more than doubled to $30 billion, up from just under $14 billion in the same period a year earlier. And that was ahead of the expectation. The expectation had been $28.9 billion. So the revenue beat. The all-important data center revenue, $26.3 billion, up 2.5 times year over year. And the estimate was about $25 billion. Automotive revenue, because of course they're involved in self-driving, these vision chips. Automotive revenue jumped almost 40% year over year, but it's much smaller than the data centers. The adjusted operating income beat expectations, once again, more than doubling year over year to just under $20 billion. That's adjusted operating income. It was $19.9 billion, just under $20 billion, and the estimate was about $18.9 billion. So it looks like a beat here. Cash flow more than doubling to $13.5 billion. Full year operating expenses are expected to grow in the mid to upper 40% range. So this company is growing so fast, its costs are also increasing. It spent about $3 billion on R&D in the latest quarter. You imagine all those well-paid jobs that are created by that, $3 billion in research. So you can see Nvidia, which slipped a bit today, is holding on. So we're talking about a price right now north of $125. It's gaining slightly, but the stock is down from that record high it got to of just over $140 briefly in June. Dan Morgan, Senior Portfolio Manager with Synovus Trust, joins us now. Dan, you've had no time to look at the numbers. It looks like a beat for Nvidia, the stock edging up. What should investors bear in mind here?
Well, Andrew, obviously you read the numbers, and for the second quarter, revenue is coming in at $30 billion. That was above consensus, which was about $28.86 billion. Data center, which was another key area because that's where these AI chips go into. The consensus was at about $25 billion, and they did $26.3 billion. So that was a big number. If we look out in regards to gross margin, you mentioned also that was a slight beat, right? 75.7 versus 75.5. So I think on the second quarter, we'd have to say that these numbers all look very strong. Now, the big number everybody's focusing on is that third quarter revenue range. We were looking for $31.85 billion, and it looks like they came out and said $32.5 billion, plus or minus 2%. Is that correct?
Give me that. So that's, sorry, was that their Q3 forecast? Yes. Okay.
That's going to be your third, which everybody's waiting on.
Yes. Q3 revenue they see at $32.5 billion, plus or minus 2%. And the consensus is $31.8 billion. So it sounds like it's certainly in line with the consensus. I don't have time to do the calculation.
Yeah. So, Andrew, I think what we have to derive from this is that it's definitely in line with what the range was expected, okay, in terms of that $31.85 billion. But I think there were some, people out there that were saying to move the stock higher, meaning that built into the current valuation. Bear in mind, the stock trades at about 70 to 75 times earnings, that they would have to hit what was kind of the whisper number, if you remember that term from back in the 1990s, between 33 and 34 billion. So it looks like they came up a little bit short in regards to the whisper number on the third quarter in terms of revenues, although they did beat the consensus estimate, which was 31.8 billion. So as far as I'm concerned, Andrew, it was a very good report, but I know that the street is just, they've got to hit every single little matrix to be able to push the stock higher. So that's probably why you're going to see a lot of volatility, after this report. Then we'll get in the conference call and get a little more color from management on what their expectations are in the third quarter. But overall, it looks like a strong report.
Now, you may have seen that the stock now slipping after the earlier gains, and certainly the numbers look like in line. But one headline I'm seeing from Bloomberg is that changes are needed to improve production of Blackwell, which is their new line of super chips. And that may be worrying investors, because I think there had been talk even in the previous quarter they were having some glitches. I mean, these products are so fantastically complex, and they didn't deny that. So it looks as though people are worried about possible production complexities with this Blackwell line.
Yeah, you're right, Andrew. And that was one of the big worries coming in this quarter. Bear in mind that they're making a transition, and we've talked about this before, from the Hopper series. Right now, this quarter was probably predominantly driven by the H20, which is their China chip that they sell in that space, and then also the Hopper H200. Starting in the October quarter, they will be rolling out their Blackwell chips, the 100 and the 200. Probably won't get mass shipments until probably the first half of 25. But like you said, Andrew, there are many worries coming into this report about possible supply constraints, possible delays in the Blackwell coming out. So it sounds like some of that news is starting to spill in. We'll have to get more clarity. But that was a worry coming in this report, that the Blackwell would either be delayed or there might be some sort of issue with supplies, something that would prevent it from coming to fruition here in the first half of 25, because a lot of the future growth that's expected at Nvidia is based on this migration from the Hopper series to the Blackwell series.
Now, as you note, the stock is so volatile. It's now down only about 3%. It's really, yeah, it's incredible. And as you say, there had been this overhanging worry about Blackwell. There were reports, for example, that Foxconn wouldn't ramp production until the first quarter of calendar year 2025. So people, and this is going back. Yeah, this was actually reported on the weekend. So I guess, yeah, the jury might be out on this Blackwell line of products, because that was a huge plunge into generative AI, among other things.
Yeah, so that's still in line, though, Andrew, with kind of the thought process coming into this quarter, which was that you would see some shipments in the fourth quarter, being the October quarter, for the Blackwell chip, but it wouldn't really ramp up. Like you mentioned, one of their suppliers or manufacturers wouldn't really ramp up until probably the first or second quarter, or the first half of 25. So I think the mosaic is still in place to be bullish on Nvidia. I don't think it's anything that's changed too much. Not to repeat the over and over, but again, the street is just pegged these expectations even above the consensus estimate for that third quarter. And the fact that they came a little bit shy of that whisper number, that may be overhanging the stock. But, Andrew, we're going to have the conference call here soon, and I know that they're going to go in detail through every nuance of this rollout of the Blackwell. And I would expect that analysts will become more comfortable with the timing of everything, and there won't be this constant worry that there's going to be delayed for 6 months or something like that. So I think everything's still in place in terms of bull case for Nvidia.
Apparently, Blackwell is packed with 208 billion transistors. 208 billion. I mean, eventually, I suppose they'll catch up with natural organisms. It'll take a while, but
yeah. Well, they're talking Blackwell between maybe $30,000 and $40,000 average selling price per chip. So you can do the gross margin calculations on that compared to, let's say, their gaming chips 3 years ago. It's a huge pickup for them. So I think they're saying, touting it as being 4 times faster than the Hopper. When we had the developers conference, they went through and introduced the new Blackwell chips, and they were talking about all the different milestones they were achieving. It's definitely going to be ahead of the pack in terms of competition. It's going to take a while for some of these other companies like AMD and Marvel and Intel and others to really catch up, because Blackwell should be a huge, huge chip for them.
And were the roots of this company in chips for video gaming?
Yeah, so originally, Andrew, the company was known as a gaming GPU producer. So they were producing chips that went into like Call of Duty. I don't play video games, but other people that do, that's what they were really made for. And, they used to talk about, when we used to do the conferences with them, their biggest thing was our chips, if you put them in the graphics of the game, they wouldn't bleed. So, for example, when you're playing a game, you have that bleeding effect of an icon or something. That was one of their big selling points. But they've made so much huge strides since then in terms of AI in the data center. But that's what they were known for. And then they flipped the amount of revenue they were generating from gaming to data center, and data centers just exploded. I think I talked about this before on the show. They're expected to do over $100 billion in revenue just on the data center group in 2025. In 24, they did roughly about 44 billion. So just calculate those numbers. It's huge numbers.
A risk-tolerant investor, should they buy Nvidia right now, do you think, Dan?
It's a tough play for someone who would be concerned about volatility and sensitive to these constant gyrations and changes of opinion in the stock. I mean, it trades at 60 times book value. Just give you an idea how high that is. If we look at the Philadelphia Semiconductor Index, trades at 6 times book value. Trades at about 45 times fiscal year 2025 estimates. And as we mentioned earlier, trailing PE of around 70, 75 times earnings. So I think that it would be something that would not be appropriate for someone who has trouble with a lot of volatility and risk, just because of the fact that it is such a high beta stock.